Good morning. Thanks for joining us today live at 9 o'clock. We're going to talk grain, livestock markets, give you an update on what's going on. Just had the big prospective plantings and grain stocks report yesterday that was just nothing, whole lot of nothing. But we'll dive into where your markets are at. It's April Fool's Day, so keep your head on a swivel today, guys. Keep your head on a swivel. So got a special guest at the end of the show. Hang on to your hats. Can't wait to introduce him. You guys stay buttoned up here, and I will. Oh, sorry. I'll talk to you later. Let's go to the markets, Rick. Run down your markets and tell everybody where we're at here. So May corn up 5 1/4, 462.5. Looking at new crop corn up 5 1/4 at 447 1/4, still below 450, but above that 445 area that we talked about yesterday. May beans up 8.5 cents, 10.23 1/4. New crop beans up 6 1/4 at 10.25.5. Soy oils up $1, 46.46. Soy meal's down 40 points, 2.99 on your soy meal below 300. Chicago wheat up 3 1/4, 5.40 on May contract. May KC wheat up 2 3/4 cents at 5.59 3/4. New crop July KC wheat 5.72 1/4 is 2 cents higher. Looking over your meat markets, feeder cattle, April feeders are 286.70 up 0.250. Looking out at your deferred contracts, you got August at 289.70, October at 286.82. Some discount as you continue rolling out there in those calendar spreads. Looking at live cattle, April is fat cattle are down 0.225 at 207.525. June fats are 203.375, down 0.275 as well. Hog market is mixed. Crude oil is up 42.71.90 on crude. Diesel's up a penny at 2.29, testing that 200-day moving average, I believe. Nat gas is down 6 cents, 405.80. The Dow's down 320. The S&P down 27. The Nasdaq down 77. The Russell down 19. Bitcoin down 900 points, 83,000. Gold's up 14, 3,137. New record highs on gold markets here. Silver's down, dollars up, and we move on here. We got a little rain on the radar in Dakotas in the northwestern Corn Belt, catching some of that drought area. That's good to see. If you're out there, let me know how much rain you got. Love to hear that feedback and hope it continues to move across everybody. It's good to get rain until it's not, until it's too much. Mid-South's going to be bracing for some flooding upcoming here midweek. Thoughts go out to them and hope that everybody's prepared for that and hope it's not too bad. But seems like it's boom or bust. A lot of rain or no rain anymore. But yeah. Stock market and recession fears continue to be the theme out there as well. Gold hitting record highs, treasury yields dropping. I think yesterday was the end of the quarter, and it marked the worst quarter for the Dow, the S&P, and the Nasdaq since 2022. So been a rough quarter here, but I guess maybe it's all up from here. Maybe I can hope. So all right, post report, more corn, plant more corn. Just a quick recap. Two important crops are in the pipeline right now ahead of us: the Safrinha corn crop and then the U.S. corn crop over the next 8 months. And U.S. farmers are going to plant some more acres, 95.3 million acres. That was kind of the big deal. Trade nailed the stocks numbers across the board for the most part. I guess going forward for me after the report, my thoughts are don't underestimate the American farmers' ability to plant and produce a crop going forward. And will supply outpace demand going forward with that Safrinha corn crop and the U.S. crop, two big crops happening right now. Will we have more or less global export competition? That's another question we got to ask ourselves and think about. So don't get distracted by the day-to-day noise and headlines out there. At the end of the day, it's a long game if you're in the ag business, if you're in the farm business, and you got to make the most of opportunities when they present themselves. But 95.3 million acres of corn. So my favorite section of the ATI Morning Wire, what's caught my eye from Dr. Schonkweiler and ATI research team there. March 1 stocks report indicated nationwide corn producers had considerably less on-farm inventory than 2024. The on-farm inventory was down 579 million bushels from last year, while commercial stocks were 377,000 greater. So on-farm supplies are 55% of the total on the corn grain stock deal. that compares to 60% a year ago. In looking at these state by state, Illinois producer had 44% of the state's farm total. That's down 9 points from last year. Kansas, just 34% of the grain stocks total there on farm in Kansas. Illinois, Iowa, Kansas, Nebraska, and South Dakota all had 8 to 9% less on farm stocks this year, while South Dakota and Minnesota on farm stocks were relatively unchanged. So interesting as you look at the on farm, off farm mix. I think some of that highlights the selling decisions, interest rate environment that we're in, and just making those movements, those decisions based on cost of ownership, storage. Do I sell, generate the cash, stop that operating note, line of credit type of deal? And some of those on farm stocks dwindling down, while the commercial storage, maybe those are in DP or some sort of pricing program that is a free storage type of program. And interesting to break those out. But all eyes going forward, after we look past the reports here, is on tariff updates and Liberation Day. Global trade disruption. Are these tariffs, are they posturing? Or is it, are they going to go through and retaliatory tariffs just upset the apple cart here when it comes to global trade? So I think some of the goals Trump has unveiled is, to raise revenue and to use these tariffs as a negotiation tool. And some of the biggest questions going forward is it going to be a universal rate for all of U.S. trading partners, or are they going to be, individual rates per country? And a little lack of clarity there, but we're going to find out soon enough tomorrow. Reading some of the headlines and news articles out there, some quotes that first thing, one quote that I saw out there was, consumers need to be patient, forgiving, and team players willing to make sacrifices as we unveil these tariffs. I thought that was an interesting quote to throw out there, especially on the back of inflation that we've had over the past few years. I think consumers are sick of paying more for these products, and the grocery bills, everything costs more these days. So asking them to be patient on more tariffs and more price increases, that's pretty tough, especially in today's extremely cynical population. Just definitely seems like a tall ask out there. So another headline that was out there was Trump was slamming India's high tariff rate ahead of Liberation Day here. 100% tariff from India on American ag products. So tariffs aren't, just an American thing. They're out there everywhere. He also highlighted the EU, Japan, Canadian tariffs that make it virtually impossible for American products to enter into those markets. So a lot's going to happen tomorrow. We're going to find out. We're going to learn a lot more. We're going to see how it impacts the market. Equities have definitely taken a blow here the last 3 months and are bracing for recession and bracing for these tariffs. There was a headline out there as well. China, Japan, and South Korea agreed to jointly respond to U.S. tariffs. That was from a social media account affiliated with Chinese state media. And I might butcher this, but Sewell called it somewhat exaggerated, that statement was somewhat exaggerated, while Tokyo said there was no such discussion. So that it's hard to know what's information, what's misinformation, what true is out there, what's untrue. But these headlines, and I was thinking about it on the way to work this morning. I was like, gosh, when you have a lot of stuff going on out here, but we regurgitate the same information over and over again. How do you keep it fresh? And what do you keep it fresh? Sometimes you got to make up stories, and legacy media out there, news that, making up stories, making up headlines. And at the end of the day, what does it do? What does it mean to you? And where do we go from here? So, but a real story, I'm going to take a sip of coffee and then I'm going to hit you with the real story. The USDA released $537 million in biofuel infrastructure funding. That was announced yesterday. So higher blends infrastructure incentive program. And USDA Secretary Brooke Rollins announced the release of $537 million in obligated funding under that higher blends infrastructure incentive plan. The funding will support 543 projects across 29 states. So a little background on this program. It was created during Trump's first term, and it supports the expansion of biofuel use by funding infrastructure projects, upgrades, pumps, storage tanks, allowing gas stations to offer higher blends, E15, E85, and B20. So I think this is a fantastic deal. I wish there was more biofuel infrastructure out there across the country, more accessibility to that. I think that is a key to driving more usage out there. That and education, where can you use it? How can you use it? What vehicles can you use it in? Is it safe to use in? But releasing those funds from his first administration, getting those out there in the country so we can start those projects, that's a great headline to have out there. Another headline here that we were going to roll through, keep on rolling through them. More farm financial aid. Whispers out there that we're going to get some more financial aid coming. Administration is weighing new rounds of emergency aid to farmers who are likely to be caught in the middle of if America's trading partners retaliate on the tariff announcements here this week. So a couple tidbits here as I jotted these down, talking points on this here. But early discussions offer acknowledgement that Trump's expansive tariffs could unleash financial devastation throughout the U.S. ag industry, a crucial voting base that was the president similarly tried to safeguard during the 2018 trade war with China. That's a statement that kind of shocks and awes me a little bit here and brings some reality to the situation we're facing here this week and upcoming potentially. Brooke Rollins, the ag secretary, said last week that administration may look to offer aid to farmers, telling reporters that Mr. Trump had asked her to have some programs in place that would potentially mitigate any economic catastrophes that could happen in a global trade standoff. So eerily reminds me of that 2018 China trade war where we talked about it, and then it happened, and we were all shocked that soybeans sold off, significantly, and Milo basis fell apart overnight. So don't let that happen to you. Don't let that happen to you. When we look back, we're just getting the payments on the ECAP. I think you were able to open up and sign up for that last week, and the ECAP program was the one implemented the end of December 20th, I believe. And we are very similar to that price point back then. You look at May corn futures, and May corn futures are $462 currently, and you go back to that December 20th, 18th, that time frame, and we're 450, 452 area. So the lows that we're hitting the last few days are very similar levels to where we were at that December timeframe. So Maycorn traded up to 518 after they announced those ECAP payments, and then here we are back sold off again. Payments are going to hit you, and we're back to where we started. So markets move; they can be dynamic, and hope you did something between December 20th and now with your old crop grain. So keep trucking away here. Speaking of, I'm going to pull in a chart if I can, maybe, because I want to highlight that May corn contract real quick. See if I can do it. Maybe. There we go. Enhance. Here we go. All right, here's the D's 20, the time frame. If you can see my mouse over here. So D's 20, we're right in here, this 450. Had early December, we're in this 460 area. May corn rallied up to 518-ish, somewhere in that area. Sold off, gave it back, testing the 200-day moving average. Nice bounce here out of the gate. Actually breaking, that's the 20-day moving average, this light blue line, and approaching the 100-day moving average there too. So good things to point out when you look at a chart. Nasty sell-off, little bounce there. Is that a bear flag? We don't talk about bear flags. We just talk about bull flags, guys. So. All right, enough with the chart stuff. We got to talk some positive stories here. So the cattle market, choice cutout, 335.26 on the choice cutout here. We've had 22 consecutive trading days of week-to-week gains in choice beef. Choice was $2.44 firmer versus the day prior and $8.16 ahead of the week prior. So 22 consecutive gains, week-to-week gains in the choice beef cutout. That's great to see, but the guy's got to wonder when the farmer's going to push back, or the consumer is going to push back on these higher prices. So that's the big question there. But they've been resilient, and especially when you compare it to the face of, in the face of a stock market recession, sell off, seeing this cattle market hang in there in the face of that is a good thing, I guess. USDA did do some beef updates in their report in the March forecast. USDA's March forecast for 2025 U.S. beef imports at 4.875 billion pounds. That's 105 million pounds higher than in February, with the USDA noting strong shipments during January and continued strong demand for lean processing beef. So more beef imports as prices are firm. Interesting as we talk about tariffs on the line. Will we have tariffs on imported beef coming from other nations? Australia, Brazil. Something to think about. Record feeder cattle index. Again, we got 291.50 on your feeder cattle index. That thing keeps climbing higher. It's great, good to see. And again, resilient in the face of recession fears. So as we roll out of here, appreciate y'all for joining me today. Great to have a good crowd as we follow up the grain stocks prospective planning reports yesterday. But guys got to wonder how you navigate these environments. It's a dynamic, uncertain environment. And question I get asked by producers all the time is, how do you navigate this? And I think a lot of this is my soapbox moment, guys. If you haven't figured that out, it's my soapbox moment. But instead of trying to figure out where this market's going, instead learn how to manage the moving market in a market that moves. Learn how you can make the most of opportunities and market opportunities as that market's moving versus trying to predict the future and predict how the next cards will unfold. So too much time in this business is wasted trying to predict that future, to time the top, and too many are using outdated black and white marketing decisions, marketing tools to ultimately, lead to a marketing failure where they have too much sold ahead of a big rally and outguessed how high that market could go, or they don't have enough done ahead of a big break. So as we face a big day tomorrow and a big week here this week, focus on what matters in your marketing. Don't get distracted by conspiracy theories. Don't get distracted by day-to-day noise, and market for the long term this year. So, all right, I'm going to head out of here with one positive note for the bulls. If you're bullish out there, 71% of Brazil second crop corn has had under half of normal rainfall the last 30 days. I think that's a great point to highlight here as we roll out. If you're bullish, I got to feed the bulls every day and give you something to chew on as well. Special event. Yeah. It's a great time to sign up for premium and make changes to your marketing plan going forward. But customers, you got to know where your customers have targets and know where those targets are at. They got orders working if you're a premium subscriber. And oh yeah, the special guest. I alluded to the special guest. Rick's helping me. I forgot my own April Fool's joke. There is no April Fool's joke. There is no special guest. April Fool's got you guys. Thanks for joining me. Rick, thanks for reminding me of my own dang joke. All right. I'm going to get out of here and we'll catch you guys back tomorrow. Thanks for joining me again today. And you guys all have a great day and keep your head on a swivel with April Fool's Day today. All right. We'll see you.